Okay, so what is a drive-by survey, or sometimes called a drive-by valuation, and could it happen to you? I'll explain everything after this intro. I'm Tim Hill, internet entrepreneur, property investor, and author of How to Really Buy a Property. No, it's not one of those books that goes on and on about how you can make millions investing in property, and all you have to do is go on my course to learn the secrets, and then you go on my course and you find out that you have to go on my master course to learn the real secrets. None of that. If you have decided to buy a property, no matter what your motivation, then How to Really Buy a Property is the smart way to do it, and it will save you time, money, and stress. All right, let's say that I'm buying a flat for £200,000, but I only want to borrow £50,000 from the bank. So from the bank's point of view, it sounds like a good deal. You know, if I stop paying my loan, they should be able to recover their money pretty easily. So the first thing that the bank does is it asks a local surveyor, how much do two-bedroom flats in that area cost? Saying it's a two-bedroom flat for £200,000. The surveyor will have a look around at what's sold recently, and he'll go back to the bank and say two-bedroom flats generally in that area are about £200,000. So it's all looking good. Now, the solicitor will be able to see some documents that say, right, there is such a property that exists on paper, but the big question is, does it actually exist physically? Is it a case that the entire block fell down 2 weeks ago and it's just a pile of rubble, or it's just an empty plot? So the bank will also say to the surveyor, go and check that that property actually really exists. And the surveyor will drive out, look, say, yeah, there's the block. I can see on the intercom, you know, the flat's there, it exists, and then drive off. And that's why it's called a drive-by valuation or a drive-by survey. It's not quite a drive-by, though. The surveyor will usually get out of the car and have a good look at the actual building. Surveyors always carry binoculars so they can have a really good close-up look at things, even if they can't get close physically themselves. So, for example, they'll be looking for major cracks in the walls that might suggest that the block is subsiding. If they see something like that, they might then go back to the bank and say, you know, although two-bedroom flats generally sell for £200,000 around here, that block looks like it's on its way over. And if that's true, then if you had to sell it again, you might not even get your £50,000 back, because probably nobody wants something that's in a collapsing block unless it's insured. So there's some paperwork checks to be done there. He might also, you know, have a look at the roof. And if he decides that the roof is in terrible state and it will need replaced, then he might say in his valuation report, I think that this flat is worth 180,000. That 20,000 that he's gone down on, that's what they call usually a retention. So they're saying, you know, if the roof is okay, it's 200,000. If it's not, the property's worth 180,000. Now, they're not saying that the work that needs to be done on the roof will cost 20,000. It's a nominal figure. It's a very cautious figure. It's usually a completely over the top figure, because surveyors are not roofers. So they just put this big sum, and then, you know, it'd be my job as the prospective buyer to get a roofer to go around. The roofer will go up there and he'll say, look, the entire new roof costs about £20,000, 3 flats in the block. So you'll all have to pay about £7,000 or £8,000 each. That's the true figure. And that would then be the figure that I could go to the seller and say, well, I offered 200,000, didn't know about the roof, not sure you know about the roof either. Let's talk about renegotiating the price because of the roof. So, drive-by valuation. It's not quite a drive-by, but it's pretty close to a drive-by. Call it a drive-by valuation, call it a drive-by survey. It's really kind of the same thing. It's just checking that the property exists. And it's common practice when the bank is lending a very small part of the purchase costs. That's all for this short video. There's much more information in the book, How to Really Buy a Property. As always, if you found this information useful, please remember to subscribe, to share, to like, to do all those social media things. It all helps other people who need this information find it more easily. If you've got some specific questions which you'd like me to have a go at answering, please put them in the comments below and I'll try and get to them. And in the meantime, good luck with your property purchase.